couple articles out there saying it'll be November 3rd before the deal is finally hashed out. So what the politicians are doing is that they bought themselves some more time with words and rhetoric, and that can is being pushed down the road. And that's what politicians are really, really good at. So there's no official news out of the EU today. There's no official economic announcements out of our markets. So that tends to yield a trading range. So we're looking for a trading range today. And the direction, note should move opposite the E-mini. So we have had sellers in this 24 to 28 area, and that's where it looks like they might be again. And then we've had sellers at 29.04 to 08. So our two sell bands lie right here and then right up here. And we've got this low volume area in the 04 area that has stopped the pretty well stopped the activity. So we had this high at 6, and the market just kind of worked itself down, and since that day we really haven't been above 28. So you can see that the market is having a real tough time at 28, and it couldn't make it. So looking at the structure, I think we got a chance to come and retest the overnight session high, get into this area. It would allow them to get stops above 28, and then we'll see what we have. We are building volume in this 20 to 24 area, and we're looking for a new move to come out of this. The new move will be probably associated with the announcement out of the EU. Now, one of the rumors coming out with the EU is that they've got 700 billion euros, and they're going to use leverage to double that to 1.4 trillion euros. And we don't know if that's true or not. The other story out is that 100 billion euros are going to be used to recapitalize Europe's largest banks. Now, I mean, if the major European banks own most of the PIG's debt and most of to completely clean up the PIG's problem, you need $2 to $3 trillion worth of capital to do it. I mean, this $100 billion figure is almost ludicrous. So we'll just have to see. The devil has always been in the details. Germany's economy is $3 trillion. Their total obligations right now are like 2.75 times their GDP. Going to be pretty hard to anticipate Germany being able to absorb this $2 to $3 trillion. So write-offs are coming, losses are coming. It's just who gets stuck with them. And right now, the entire world is playing musical chairs as far as the stock markets go. They don't, as long as I'm not the last one standing, everything's cool. What we have to be cognizant of is that banks, like dictatorships, fail overnight. And when a bank goes, it just happens instantly. And if you look at the way the contracts are loaded, U.S. Treasuries, the ZN primarily, are spring-loaded to explode to the upside. Crude is spring-loaded to explode to the upside. Indexes are spring-loaded to head lower. The surprise news that comes out is just never supportive for stock markets, but it can be for crude oil in the form of war, blockage of the Gulf of Hormuz, and for the ZN, it's picking up war, it's picking up problems in Europe wherever they happen to be, problems in our stock market. So what we don't really see in the Treasury market is long-term selling. And that's held us in a trading range of 128 minus to 131 plus. And that's where I still see us until Europe's problems are resolved and our growth problems in our E-mini. So we're looking to sell aggressively this 28 to the buck, and then 3 to 7. Now it is Monday morning. There isn't a lot of news. The volumes are off significantly in the E-mini and the note for the overnight session, so it may take a couple hours for things to resolve themselves. Typical Monday. Okay, when you look at what our central bank has done to help ease the United States through its crisis, if the TARP funds had been used as they were sold and as the legislation was written, we would have taken down $900 billion worth of bad debt out of the mortgage-backed industry. That's not what happened. That $900 billion was used to tie the banks over to lend money to them. The idea was that the banks would trade through the stock market, etc., trade their way out of their problem and rebuild their balance sheets. What has happened is that the mortgage-backed securities are still stuck in a lot of banks' portfolios. Bad consumer debt hasn't worked its way all the way through. They have made phenomenal trading profits, but the bad debt that's on their books, a lot of it is still there. So what we're seeing as they report earnings is that they get these big increases in the value of their derivatives that were purchased to make sure they don't go underwater. And so you can't really believe the numbers coming out of our banking industry. So our government still, they've printed money. 1/2 of every issue of new debt goes straight to the Fed's balance sheet. So they, in essence, are printing money. And because we have a single currency, you see that in the fact that the dollar has been whacked over the last several years and will continue to be under pressure as long as we print money. The only thing holding treasuries up is the Fed's commitment to a 1/4% interest rate. You just won't take our financials too much lower or too low because of that, and the fact that they are buying half the debt that they print. So things aren't rosy or perfect in the United States. They're better than they are in Europe for a while longer, but not for a heck of a lot longer. And if you want to see who the world's biggest debtor is, it's not the EU, it's not the pigs nations, it's the United States. Okay, we're getting some acceleration to the upside. We've got pretty good resistance up here at 28. So my guess is we're going to test or probe the 28 area before we find out if they're selling. The trading range premise for today is based on the fact there's no news, and Europe has us on hold until at least Wednesday. So if we take a look at where the clean break in the market is, this 20-21 area is potential support. And then we got a real clean break down here at 17, 16 to 17. So on the idea of a trading range, we have a 13 to 17 buy, and then a 27 to 31 sell. And that 27 to 31 is pretty aggressive. Not a huge number right here, but this is the number we have to track today. And until right in here, most of the volume was going to the buy side. So we'll pay attention to this net cumulative buying down here and see if these bars can get taller. If they do, that opens us up to something above 129, but based on the new situation, I don't think we can break it out. Any questions on the note or the bond before we head on to the E-mini? Okay, let's go back and take a look at a bar chart on the E-mini and show you what happened last night. We've talked about markets being in trading ranges and how they like to retest support and resistance. And we have, in March, we hit that 1242, which was the bottom of the trading range. The low was 41.25. Last night's high was 42.75. Wasn't that cute? 42.75. Why was it 42.75? Anybody? Yeah, they got stops, but the 42.75, you got a round number at 42.50, so they made sure they got those stops too. I mean, we're up here, we're going to get stops above 41.25, and there's 42.50. Why not? And you have to really, really understand that this E-mini market, what gives the exchange members outlandish lifestyles is fleecing the lambs or the retail paper that comes in. So this was support. Now we're going to see if it's resistance. In fact, this market can trade up into this area right here, this 1260 area, give or take a little bit, and still not break the downtrend. So what has taken the market from this all the way up to here? It has been massive short covering in the EU when everybody was dumping the EU and our Treasury was lending money to the European Central Bank when there was a run on European money market funds that were paying higher than the US. So we've had a massive rally in the EU, and our short interest in our stock market before this rally was equal the short interest in the end of 2008. And the stocks that have seen the biggest gains are those stocks that had the biggest short interest. So we've had a short covering rally in the euro currency and a short covering rally in the E-mini. And we have had some economic news that says things are better than those forecasts made by the people that think we're going into a recession. So you can't clearly state that the U.S. is headed into a recession yet, but you can state, and the Fed does state it monthly, that growth is problematic and that it is slowing down, and everybody's hopeful that we don't go into a recession. So we'll see. The large companies, as far as their hiring plans go, they're cutting back on those. Where you might see another round of cost cutting from our large companies, but they're not the engines of growth. They're not what grows employment. It is the smaller ones, the companies with less than 100 individuals is where growth comes from. And they're on the sidelines due to government health care programs, etc. So anyway, what we do know for real is that 42 was retested. We can trade as high as that 55 to 60 area and not change things. And short covering in the EU and in our stock market has been the engine behind this. So I wanted to show you this. Now, when you go back and you do your bar chart work, once every year or two, you get a shot at this type of situation right here. So you would have been a seller at 39.50 to 41.50 based on that low right there, and right now we're currently trading at 36. But we come back up in the day session, we can't get through 45. I think that sets up the best short for the day. If you think about what's going on with the world's financial ministers and the civilian governments who employ those financial ministers, it really does remind me of what we've all done in the situation we've been put in with a bad trade. When we first start out, and as novices, we don't take risk protection. And then all of a sudden we lose more than we wanted to lose. But there is money in the account. So our first step is to go back and put that stop, a limit sell or a limit buy, where it should have been in the first place. But the market doesn't quite get to it, and it leaves you hanging. Then it makes another move against your position. Then you move your stop down to, well, this was the high or the low right here, and the market doesn't quite get there. And because we have money in the account and we don't want to realize that loss, we turn a small manageable loss into a catastrophic loss. Now, that's our human nature displayed personally to us. Now, think about what is going on with the leaders of the world governments. Nobody wants to realize and take that big loss. That can is being pushed down the road. It's the same thing, human nature. I don't want my name associated with this write-off or write-down. I don't want it to happen on my watch. I can still borrow money, or I can still print money, or I can do any of the rest of this stuff. And then you take a situation for the United States for, for $1 to maybe $1.5 trillion. We could have absorbed all of that debt. We could have forgiven taxes to such and such amount for another $1 to $1.5 trillion. And where would we be today? We would have written off and we would have absorbed that bad debt. We would have given a tax holiday. And if we'd cut the regulations and the rules, we probably would be through this mess right now. But what have we done? We've created $4.5 trillion in new debt, probably higher. That's what they'll fess up to. We've got $1+ trillion deficits for the next 10 years. And our economy is teetering on the brink of a recession again. And so I just find it fascinating, and it really is a study of human nature when you do it. I mean, these guys just have a lot bigger checkbook than we do, but they're going to do the same thing that we do until we get smart and recognize there's only one thing to do when you have a bad trade, and that's just get the hell out. And you don't question it, you don't dally, you don't think about it when you have trading maturity. You just get out, you take your lumps, and you get on down the road. And being able to do this, so takes a level of maturity that novices and beginning traders don't have. So what do we have here on this screen? We have a low volume area where we spent very little time in this 1235, 1236 area. As we move up, 1243.50 is another low volume number. And then volume starts to build above 1257. So we can get up that 55 to 60 area and not really change things. But it's this low volume area right here. It's where resistance is, and we're probing into it. So in the overnight session, they got stops above 41.25. We've got a current high of 42.25, and that's a legitimate trading target. I mean 42.75, excuse me. And we've got this low volume number here at 43.50. So I would see right now probably best resistance in this 43.50 area to 42.50. And we've had a tendency in this market to trade to 350 handles as we've gone up. Won't quite make 75, won't make 73.50, won't quite make 50, etc. So we'll see how this plays out, but retesting that level right there and having it hold, that's the first barrier we have to get through. So our first sell is allow them to go a little higher, fail to get through that 41.25, 42.50 area, come back down, and we sell on the way back down in that 39.50 to 41.50 area. Then our second play is for them to go get stops above 42.75s with a 44.46 sell. And then the key number we got to get through is this 36 area. It's a low volume number. If we get through that, then we got to take out 25 to 27. And we have all this volume here from Friday in the 27 to 30 area. That's our attractor, and that's where it stops. So we'll see if that happens. It's Monday morning, and things are usually pretty quiet for a couple hours. So far on this one, we've got lower highs. We haven't quite made the value area low. And the very, very clean breaks in the overnight market are where we are right now at this mode. You can just see right through here that that's where the break is. So that's at 36. That's that low volume area on the charts. And when you look up to this market, your next area is where the mode is at 39. We got our high at 42.75. So there's a possibility that the high is in, and 36 might be it. So we'll have to see. This is a very, very aggressive trade. You are making a directional call. The 39.50 to 41.50 area gets us up into there, and that's a structural sell, and that's the one that I would prefer. On the buy side down here, we have 30 to 32 would be the first buy zone, and then our second buy zone is 25 to 27. So based on what Europe's doing today, I'm seeing a trading range at least through probably Wednesday, 11 o'clock or noon. That's when Europe usually makes their announcement. We'll see if that happens. Any questions? Note looks to be a little higher. Don't see any signs of failure yet. E-mini looks to be a little lower into its day session opening. Probably get some retracement. Okay, for those of you that are new to the room that are going to be visiting us this week, we hold all questions till 11 Eastern, but we'll talk about a lot of stuff, and we'll get in as deep as you want to go into your questions then. What you're looking at on this screen right now, this is our equivolume bar chart. The width of the bar shows the relative volume being done in that particular bar. The yellow value areas, this is the delta between the buying and selling for each individual bar. So as opposed to having to make a count, you can just see that it's blue or red, buying or selling. And this is the cumulative buy-sell. And this is like a slower moving average. And if you're long, you want to see these blue bars getting higher, and you want to see the height of the blue bars greater than the depth of the red bars. Yeah, on both markets, the F2 suggests higher for right now. But I'm in the context of what's going on, Dennis. I'm basically saying trading range. So on the E-mini, if we don't crack that 32, 36 area, we can get long and see if we can get through 42.75. That's what the structure is saying. I'm just making a call that what's coming out of Europe is going to keep the markets on hold. So I'd like to be a buyer in that 25 to 30 area, and I can sell failure at 40 to 45 basically. So I mean, it just gets down and we're going to have a trading range or not. I mean, that's my guess, and we'll see if it happens. And it is Monday morning. I mean, quite often it's 2.5 hours before we know what we have on Monday mornings. Any other questions?